Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the Forex market. So although it's not many things to discuss today, this market mostly is calling around the same areas, but a few important events currently starting to happen. So actually is currently they have more psychological effect rather than practical impact on the markets, but still it is important. First of all, tomorrow the quantitative tightening program from the Fed Reserve starts. So I congratulate you. The same story is about European Union, but they're a bit different situation. It's very difficult overall conditions in the economy, and we will dedicate a bit more time to the subject in our coming weekly report this week probably. Well, in general, the European Union and the European Central Bank and Fed is moving in the same trend, so they also start closing the money printing, tightening the conditions, thinking about rate changing in June, July. But situation in the European economy stands more difficult, and especially in the recent pack of the sanctions that they have intends to impose, especially against buying the crude oil. It's a difficult situation right now there. And that also could bring some negative effect, and simultaneously they are tightening the financial conditions. That might be really significant impact on the markets. In general, where I talked about this in our weekly report. So I would just say that we should be prepared for a bumpy ride. So it might be really big volatility and big pressure on the market with the combination of these two factors: very high inflation and starting of the tightening of the policy and drying the liquidity. This is bad combination for any economy. So speaking about the euro situation, so we talked about this. Currently market hits the 50% level, completed the harmonic swing, and we said a lot will depend what will happen in this area. If market will able somehow to move higher, it means that it could double the harmonic swing and reach near around 110, 110.50 level, which is actually important level on the high time frame on the weekly chart. If market fails to do this, most probable that we'll get a drop below these lows and downside continuation to our next destination point, which is currently seems, well, also probable. So it may happen. So currently this is definitely nothing to do for bulls, because bulls should wait for a pullback for some support area where we theoretically could consider taking the long position, but bears, especially those of you who trade on the intraday charts, could consider possible taking the short position according to our trading plan. On the 4-hour time frame chart, we said that market should try to complete the XOP. Probably this might happen by the butterfly. So you can see, but market barely hasn't reached it. So it has completed 127 butterfly, now turning down, but XOP has not been completed. So currently it's difficult to say whether we will get the completion of the XOP or not. But if you would like to take the short position, it would be better that you will place stop not just above this area, but include the XOP as well. Because if somehow market will show some swing up here, complete the XOP, it will not the breaking of the bearish context. It will be, or bearish scenario that we're considering. It will be just action to complete the extension, and to avoid occasional washing you out from the market, it will be better to foresee that and place stop initially above this area. Why we think that maybe we will not go to the XOP? Because I don't remember whether we talked about the interest rates head and shoulders pattern on the Forex report or in the gold report, but I definitely remember that I have shown this chart and even put it in analysis. Probably it was on the gold. So here, this is 10-year yields, guys, and we have the hand shoulders patch. Now, as you can see, market starts to form right arm, and with the rising of the interest rates, this will be support the dollar. That's why euro currency, in fact, stands in a downside retracement on a high time frame, it's more probable that we will get the pullback somewhere to the 106.12 20 at least. So that's why currently, since the retracement on the 10-year yield already starts, the pullback forming right arm, this might happen that market will not complete XLP right now. That's just simple logic. But anyway, this is very minor detail in general in overall scenario. So just place stop if you would like to take a short position above the XLP. That's all. So on a lower time frame, here's a few options that you could follow. Actually, we have here a minor butterfly as well. This has been completed already. Just here's the large butterfly that you see on the follow time frame chart. This is also minor butterfly exists. Unfortunately, we don't have the free drive, but anyway, there's a few options to consider. You could try to jump in right there, so based on this butterfly, hoping it's downward continuation, or alternatively, you could wait when the market will start to bounce from the first support area around 106.90, 107, right there, and then could start forming the right arm. Here as well, also could consider the hand and shoulders. You could combine both ways to enter. So on the hand shoulders, you could try to take position on the right arm top. The only question might be is that if market will just break it down directly without any right arms and with downward continuation. In this case, you will not get a chance to step in, or it will be much worse from the price point of view. So that's actually the riddle that you have to decide by yourself, how you better to possess yourself. Maybe you will combine it. Maybe you could try to take position 30-40% of your position right there, placing stop above the XLP, then waiting for the hand shoulders will be formed. Hand shoulders will be formed. You could add more at the top of the right arm. So something that's this kind also is acceptable in the current situation. This is mostly tactical question, but in general, we are waiting currently forming on some reversal pattern or direct continuation, and most probable destination point initially probably will be around 106.20, 106.30 is confluence support area. On the cable, by the way, guys, we have approximately the same story. So recall what we discussed. Market hits the OP. We are watching for the hand and shoulders, the same as on the 10-year yield. Market also starting downward action. So here's our bet on the possible downward action, and scalp short position also was correct, but we have discussed it even in the middle of the last week. So when just market has hit the OP here and completed the butterfly as well, slower time frame right there. So actually you could see here this also might be the head and shoulders, but it will be more than 1618 probably. Very similar stuff. That's actually what we could keep an eye on the forex market, and we'll see what the progress will be.